Good evening, all. Ira Epstein with your Metal Market Update, and this Metal Market Update is for Wednesday, the 22nd of February, 2023, about 6:20 p.m. Central Time. So, the event of the day was looking at the Fed notes, and for those of you that get my full research, and I solidly recommend you do, I did a big write-up on it, what my thoughts are, where we're at, and how things are going to play out in analyzing what was said in that report. And I think it was pretty important what was said in the report. Suffice to say, the stock market wobbles with it. It's not crashing off of it in any stretch. But I think what it really does, and I'll explain in my reports more why, is the Fed's going to stay. I'm in the camp now of just 25 basis point hikes from now until God knows when. And I want to use that term carefully. I don't know when they'll end. I don't think that there is a need to go 50 basis points. We'll call those the outlier numbers of Ms. Meister and Mr. Bullard. And the reason at this point is we're not seeing the run. What they're upset with, and rightly so, is the stickiness that's coming in. My fear is that we can get even more stickiness in the service sector jobs. And I mention that because come spring and summer, there's an awful lot of outdoor activity that demands service sector people, even the trades, such as builders and so on. You know, when we're cold in the Midwest, I'm not saying you don't build, but it's not the same pace that you build and put up things that you do the other way. Outdoor dining, the people that do your lawns, the kids at camps. I can go on and on with this all over the country. It's not in any one area. It's all over America. Not everywhere is fortunate to have California and Florida weather, all right? There are plenty in the center of the country where we just are cold. And we've been fortunate, and I don't put that off lightly, to have a mild winter, although tonight we're in the midst of a major, major ice storm and snowstorm in the United States that as fast as it's here, it'll be gone. We're going to be 50 in Chicago in a day or two, but the ice is knocking out power in some of the areas around us, and it's very, very treacherous outside. Okay, so if the Fed is going to stay strong, which I believe that's just what they said they're going to do. It'll keep the dollar relatively strong, but not necessarily running up dramatically. The dollar may find a home here where it says, okay, we're going to go 25. And now if you looked at the Fed watch page, you're already up to 5.39%, climbing above the 5.25 the Fed had done. So that sort of puts into play in a nice way a March, a May, and a June rate hike. Could it change? Of course, if things were to weaken. But if they don't weaken and they stay strong, no, that's where you're at. And that puts off a lot of things. Those that think you're going to pivot quick, I can't imagine the Fed not taking a good quarter after they decide to pause, a minimum of a quarter. Could be longer before they come to the conclusion, especially Mr. Powell, that we embed to the downside the momentum. He might wait 6 months. That puts a real question as to there's going to be a pivot to the downside this year. That's how I view it. And therefore, I'm adjusting my thinking as to things priced in dollars as to what they'll do. Now, I have been looking for gold to make a run towards the 18-week moving average of closes. We're at 18.2510 for the week low. We're at 18.32 now. We'll see if we can get down there. When you take a look at the daily bar chart, you can see how the market has got the pattern of lower highs, lower lows. You are still very much in the bear camp. Big supports 1809.60 to 1809, the combination now of the 100 and 200-day average. But you always look to see where the Bollinger Band is coming in, and it's coming in right here at 1809 to 1808.40. Real important where it's coming in. So that, to me, is a major number in the market. Can it get through it? Sure could. Do I think it'll have ease staying under it? No. I think it'll have a real hard time staying under it. Last, you still have an embedded reading. So the rallies get sold. The market doesn't get short covering, in my opinion, till the red line, this number 781, closes over 21. The word is closes over 21, and that could set off the short covering. Until then, the rallies, I think, continue to get sold. Now, before we get into the silver and the other markets, I want to make a point with something. Yesterday, I told you about my special stock report, and I did it on Walmart. And then a lot of you went in and you found that there was a screw up. We found out what it was. We had tested it for the people, and that's all we tested for, that are members, that are subscribers and work with us on a regular basis. We didn't realize the other people the system was rejecting. It's fixed. So if you want to go look at this report that includes price counts, weekly charts, daily charts, it's only up 3 days. Yesterday was day one. It's going off. You won't be able to see it after tomorrow. So come Friday, bye-bye. How do you do it? Go to our website. You can move your cursor up here to give it a click again. It'll let you in this time. We've checked it and rechecked it. Remember, we hadn't done ever a stock report. So this is the first time. And what we checked, we didn't go far enough. Human error. That's what it exactly was. And I'd like you to take a look at it. All right. So let's go back and take a look at where we're at. So in looking now at the silver market, silver has tried its darn best to come down and then back up and down. Now, this is the ratio chart, but you can measure silver. So silver was stronger than gold over here. You needed less ounces. This is how many ounces of gold you need to get 1 ounce, rather, let's call it silver you need to get 1 ounce of gold. So the higher the number, the cheaper silver is. The lower the number, the more valuable silver is. Does that make sense? Well, right now, silver overall has lost value against the dollar, gold rather, when it closes under 84.20, which is the 18-day average. That should break the market back. Sorry, my grammar's all screwed up there. What we've done so far is we have an embedded reading that has rallied up into a resistance area that's always dangerous, but it is the resistance area of the 100-day average. Now, when a market is over as long as silver was the 100-day average, I naturally am nervous about getting short under it. Nothing changes that. Now what the market has told us, it fell to the 200-day average, found its support, went back up there. The market's giving you its natural resistance and support zones. It's made them up again. The 2202 is the resistance now. 2120 is the support of the market. When you lose the embedded reading, you'll pop through that number and probably right up to wherever the 18-day average is, and that's where the next test will come in. Until that occurs, I think the pros are selling short, looking for further declines. In the copper market, this is all about how's China doing. And China is pulling out the plug, and they'll keep doing it now as the year goes on. I think they're beyond their COVID problem. I told you that, I explained it yesterday why. And therefore, these are the kind of market events I look for. Now, this is the first time copper is saying it's out of its downtrend. Let's applaud it. Remember, I'm a guy that thinks it's going up here this year. I could be very wrong on that, but that's where I think it's going. And that's a combination of problems in Peru, Chile, and I do believe come the summertime, you're going to see a lot of demand for outdoor building, and in China, more money thrown at their economy, turning inward, so on and so forth, and away things go. That's my guess. Do I know if I'm right? I don't. That's my fundamental point of view. My chart point of view is very different. When I chart, I take off that hat. I'm a Jekyll and Hyde, and I put on my chart hat. This is bullish, but it's overbought. You couldn't get me to want to buy an overbought market, so I walk away. In the platinum market, we've had a declining market that has suddenly got a big rally. Now, the last rally high was here. And if you and I take a look at that number, which we can do, well, what do you think it was? Let's go get it. And here we come. I'll do it slow so you can see what it is. That number's high was 964.30. Have we taken that out? First, I'm watching here. If the red line closes over 21, I would tell you, don't be short anymore. The odds favor that you're going to move because you're already at the 200-day average, probably to the 18. And that's where I still think the possibility lies, okay, that you're going to go there. To get there, it's about where you're at there. So it's an interesting resistance point. It's certainly not a buy signal. It could be a signal you don't want to be short anymore. That's all. In the palladium market, you're correcting present tense an oversold condition, but haven't corrected past tense that situation. These numbers are still not over 30, nor are they under 20. There's nothing that I see. And in the dollar, well, if it goes the way I think, the dollar's still going to stay strong. It's embedded until the red line here and that number is 90, 91, closes under 79. I think each and every break will get bought by the markets looking for the Bollinger Band top, working itself gradually higher with each 25-point hike, and then we'll have to see what other central banks do. Then there'll be the talk, well, they're going to do more than the U.S. is going to do, blah, blah, blah. That'll be where you're at on it. So that's the way I'm going to approach the markets. It should be fun. Get these things out of the way. Now we have clear sailing until Friday. I know that sounds crazy, Friday, but that's when we get the Fed's favorite indicator, the PCE number. And from there, then we move. Then we're back into the unemployment claims, the beginning of the year, jobs report, and so on. But so what? You got to wait until March, and I think you're baking in a 25-point hike, so I don't care how bullish those are. The upcoming reports, in my opinion, won't be as important as the February ones will, because the market's already, I think, pretty well decided 25 is where they're going to go in March. So again, if you'd like to see the Walmart report, I think it's pretty important. Here's how you do it. Just go to our website. Again, click up here, go to our site, and under the word research, it's there. You have a great day. See you tomorrow.